So the biggest one-day fall for a year on the local market. Earlier I spoke to Ken Howard from RBS Morgans. Ken Howard, what should Australian investors make of all this volatility today?
Well, Tiki, I think the big lead for today came from the US being down 2%, and I think the lead for the US is obviously coming out of Europe. Still plenty of concerns about what the EU, the IMF and Greece are going to do in terms of navigating the next 12 months. And 30 June is really a deadline for the IMF as far as coming up with those arrangements. So I think the volatility will be with us for the next couple of weeks as the politicians from the various interest groups are out there posturing, trying to put forward the best position to suit their interests. But that posturing will leave the market, I think, guessing and in a volatile state. So there'll be more to come. But as I said last week, the earnings are there, the dividends are there. It's probably a good time for portfolio buying.
Today, banks seem to be particularly hard hit.
Yes, look, the banks have had a pretty tough couple of weeks. They all reported reasonably well, but paying the big dividends that they're paying, as we've seen with NAB today, when they go ex-dividend into a negative market, the market seems to sell them off fairly heavily. So NAB down over 5% in today's market. Not warranted for long-term investors, but going ex-dividend in a negative market really isn't helping their cause at present.
We had a trading update from Wesfarmers. What did they have to say for themselves?
Yeah, look, it was business as usual for Wesfarmers. The rain certainly affected the coal coming out of Curragh, and the market was aware of that. So there was a bit of a downgrade, but I think that was really just bringing the company's guidance in line with market consensus thoughts. But the interesting area for me was the ongoing investment as far as the coals business is concerned, and the gains Wesfarmers has been able to make in terms of driving their sales, particularly in the fresh food area. So all the investments they have been making, whether it's into the meat and seafood side of things or into the fresh produce side of things, is delivering those extra sales, which is really what investors want to see out of Wesfarmers, because that's certainly what's being priced in.
And I see the bid for Equinox has gone unconditional. What's the significance there?
I think the significance there is that the corporate activity as far as the global markets is going to continue. US corporates are now delivering their record profit. So their profits reported for the last quarter were better than the profits reported in 2007 pre the GFC. So those corporates will be out there looking for opportunities to invest their money. That's how they're going to achieve growth. The global economy is not really driving their profits, so it will be an ongoing series of mergers and acquisitions that we'll see out of equity markets. So Equinox is just another one that's being ticked off, going unconditional, so shareholders will be getting their money in the next 4 or 5 days.
Ken Howard, good to have you on board. Thanks for talking to us.
Thank you, Tiki.